Good morning everybody and welcome to the Smart Charts European session. Hope you are all well. Let's dive in, see what's been going on. First up, markets continue to focus on the US dollar. So we've been talking about the US dollar for quite some time over these past several months because it's been the biggest theme that has really been affecting the flows of the financial markets. There's been pockets of other themes as well with really good moves in gold and Australian dollar, stock indices, and these are other themes that have been developing. But the biggest driving force has been the weaker US dollar, and it took another nosedive yesterday because of the US consumer confidence report, which resulted in 98.7 reading, but the market was expecting 103.9. So it was a huge disappointment, a huge miss. In fact, it's the lowest level of consumer confidence in 3 years. So there are concerns that the Fed rate cuts last week, which were more than expected, 50 basis point cut rather than a 25 basis point cut, was due to fears of an economic slowdown. And now we have started to see data which may start to support that case. So this becomes now very interesting because the markets may now shift their focus to actually identify the fact that, well, look, a lot of these economies have been struggling. We looked at the PMI data on Monday, which across Europe was really bad, caused a weakness in the euro, which helped some of our trades go to the downside as well. But again, we've got a lot of economies struggling, showing very negative economic data. So at some point, the markets may shift gear and start going into more safe havens, okay? So something to keep an eye out on. Now, that weaker US dollar has helped to lift gold, commodity currencies like Aussie, Kiwi, Euro and the pound, as well as US stock market indices as well, with the S&P, the Dow reaching record highs yesterday. It's been a fantastic time trading these trends, but now it actually is a more challenging time for a lot of traders because we're quite stretched into the moves, okay? So you really have to go to the faster time frames, the lower time frames, to capitalize on the momentum that's still developing and try to get that reward to risk in the fewest amount of pips as possible. What can happen here, it depends on your style, okay? So for me, I'm more of a sort of longer term, medium style trader, trading the daily, 4 hours, sometimes the 1 hour. And what can happen when you're trading sort of the higher time frames is when you're so far stretched into a trend, a lot of beginner traders, just because they can't get to the long side because it's so far into the move, they just immediately start thinking, oh, I'm just going to try and trade a reversal. I'm just going to try and short it, right? Absolute no-no, all right? We need to wait for market structure. You need to appreciate that actually there are different players out there. When you were buying all these currency pairs and markets several weeks ago on the higher time frames, the fast time frame traders weren't doing anything because nothing was in agreement on the faster time frames. So when the higher time frame traders are active, lower time frame traders are probably less active, and vice versa, okay? So just appreciate there's different players in control of the market. Some of you might be trading multiple time frames, multiple styles, and participating in all the different things. That's absolutely fantastic, nothing wrong with that. Go with what works for you. But it's an interesting time now. We're far into the trends. We'll look for continuations on the faster time frames, but from a bigger picture perspective, we also need to start thinking about some exhaustion patterns, change of market structure. In this instance, it may not be a trade there for those reversals, which is fine, but we're going to keep an eye on it, and we're just looking to play it both ways really. Faster time frames, continuing the trend, but just being aware of any change of structure on the higher time frames. So it is a big theme that has been developing, and we're continuing to trade this theme as well, just until basically it stops going in that direction. That's the thing with a trend. The trend can keep on going for far longer than you would expect. So we always need to just trade with that move. But of course, we just need to be a bit more cautious when you're so far into the move. Markets are a little bit more stretched because if everyone's so long on the market, everyone's long on the euro, the pound, the Aussie, the Kiwi, everyone's heavily short the US dollar, then when everyone decides to come out of their positions, it can cause a really, really big move. So we've got to be mindful of that. And maybe that move will be tradable, and that's the key, isn't it? If we can identify those things, we can trade them. I'll do my very best to keep you updated on any of those potential market movements and trading opportunities in these webinars, but make sure you're tuning into all the other live trading webinars throughout the trading day as well, so you too can capitalize on those as well. Okay, so it's been a really good trading week so far. We've been working our way through the high impact news announcements, and a lot of them have actually given us some really good trading opportunities this week so far. But now we are moving into the middle part of the week where we don't have a lot of high impact news announcements coming out. We had the Australian inflation report overnight, but it was actually as expected, so no real market movements there. The Aussie's obviously been on fire, and we've had some really good trends on most of the Aussie pairs actually on the way up. And most commodity currencies, Aussie, Kiwi, have been really good, which is why our Euro Aus, Euro Kiwi short trades have done really well. So again, we'll look for those continuations, but we're quite stretched, so keep an eye on the lower time frames or any change of market structure. But a bit of a quiet day on the economic side on Wednesday, so keeping an eye out on all the big news announcements coming out over the next few days, especially the US GDP report, right? Because we've just had a very disappointing and weak consumer confidence report. So let's see how this US GDP data, is that going to start to stoke some more fears of an economic slowdown in the US, potential recession, those kind of things. So now that US economic data does become quite important, okay, if there's a trend of weakness developing, and that could cause some really interesting trading opportunities over the next few months. So certainly something to keep an eye on. For now, let's dive into smart charts and have a look what's going on. Okay, so one trading opportunity that's been highlighted from the London and Sydney trading floor is actually euro against the Canadian dollar here. And what we have is, we have on top of what smart charts is finding, we have price stalling overnight in that moving average zone. Now it's a volatile currency pair, so as long as the bar is actually in the zone, this is okay. As long as it's not kind of trading completely outside of the zone, this is fine. All right. Sometimes you can see that price does peak through the zone when the volatility is a bit high. But what we do have is this structure here of this higher high, higher low cycle. We can see that price, also at this angle of price here where maybe buyers could potentially turn up and continue the movements. However, what we have here is a potential trend continuation, but there's also a chance that we could be inside of a trading range. All right. So how do we deal with this? Because sometimes we get trends developing inside of an overall trading range where we've come from the bottom and we're working our way towards the top, and we haven't actually got to the top yet, so there's still a chance of it going a little bit higher here. All right. So in this instance, we've got some nice clues of confluence where buyers could potentially turn up, but we are in the middle of a trading range. So this is again more of a positional type of trading style. So we know that over the past few days we've had high momentum and really good trend continuation, time frame agreement, and that's where we go full percentage risk. Whatever your stake is, that's where we go full percentage risk. But then there's also going to be times where the market is not in a clear condition, where it's transitioning from one to another, and that's what we call positional trading, where the market condition hasn't fully yet developed, but there are clues and evidence where it could start to develop. And this is where then we start to lower our risk just to navigate those opportunities. Some people might just completely stay out of the market, and if you're happy to stay out of the market for several days and weeks and time, then that's fine. But in this instance, when you do your back testing, okay, and when you look at over a sample size of trades, that your positional trading, if you're doing it correctly, can still yield a profit, but it's just a lower success rate. All right, so obviously you've got to work out your sort of probabilities and your style of trading. So in this instance, because we've got good confidence where buyers could turn up, but we could also be in a bit of a trading range, we'll tend to lower the risk on these type of trading opportunities. So on top of identifying the opportunity, one of the most important things is that smart charts will help with the risk management. So if we click the buy icon, smart charts will populate an entry price of the blue dot, stop loss of the red dot, target the green dots. These can all be adjusted according to your own user preferences, of course. And then we can adjust the risk here from, let's say, 2 to 1%, and it will already recalculate the position size automatically. All right. And then we'll have to set an expiry of current bar close, because we do like to look for momentum even on a positional style of trading, and then decline or accept the trade here at the bottom. All right. So let's see what the day provides. Really, the focus is going to be on some of the faster time frames to see if we can get some of the big trends that we've been seeing in the dollar pairs, get some trend continuation developing there. So make sure you're attending all the live trading, fast time frame webinars and boot camps all throughout the course of the day, so you too can highlight those trading opportunities and participate in them as well. For now, that's it from me. Thanks for tuning in. All the best for your trading. See you next time.